Hello and welcome to episode 381 of the Money to the Masses podcast with your resident expert, as always, Damien Fay and me, Andy Leaks. Damien, welcome back. How are you doing?
In positive mood as always, and in fact, getting some of the feedback from the throwback episode we did last week was great, because I always like to hear what people think when we do something slightly different, because it is good to change things up every now and then. And almost on that note, we're doing something different this week as well. And it's partly because last year we did a team takeover episode and we thought we'd do a similar thing this time around. So what we're doing this week, the Money to the Masses team are taking over the show, and I'm not going to be appearing on the rest of the podcast until the very end when I come back to say goodbye. So it's almost a high bye for me on this episode of the podcast, because it's good to let the team decide what they want to talk about on the show without any input from me.
Okay, so let's get on with this week's show. And we've got special guests, Harvey and Lauren, coming onto the show. And I'll be finishing off this week's podcast with a little piece myself. So let's bring Lauren onto the podcast first then. And Lauren, we were talking in the office, weren't we, Lauren, about a couple of different products and updating a few articles. And we realised that there were a few quirks of certain few insurance products that we thought, do you know what? I didn't really know that. And I'm glad I researched it. And we pulled together a few of those into one piece that we thought might be good for the podcast. So Lauren, what have we got?
Yeah, so following on our discussion the other week in the office, I decided to have a look around all of the different insurance policies and pull together some reasons why you may not be able to claim on your insurance policy. And some of them aren't actually that obvious. So there are ones where obviously if you don't declare all of your pre-existing medical conditions, your insurer is unlikely to pay out if you are trying to claim for something that you haven't declared. That is fairly obvious, and that goes for a few insurance policies such as health and life insurance, but that also applies for pet insurance if you don't declare any pre-existing conditions that your pet may have. So that leads us on to another thing. One thing that you should always do when you take out an insurance policy is be honest. Now, this applies to every single insurance policy that you will take out, because if you don't declare all of your pre-existing medical conditions, or if you lie or fabricate something in your insurance to try and get a cheaper policy, you could get caught out down the line. Now, this also applies for things like home insurance. If you say that you have a burglar alarm, for example, some insurers may provide a discount for the extra security in your property. But if you don't put your burglar alarm on, or if you declare that you have one when you don't, you could actually invalidate your policy. Now, if you do have a burglar alarm and don't put it on, some insurance companies, such as Admiral, stipulate that you should notify them if you stop using your burglar alarm. This is because you may no longer be eligible for a potential discount that you may have got, or there is a reason that if you do need to make a claim, such as a burglary, for example, some insurers see the burglar alarm as a preventative measure that could have perhaps prevented your property from being broken into. As with all insurance policies, we recommend that you read your terms and conditions very, very carefully so that you know exactly what you are and are not covered for when you take out your policy. And while we're on home insurance, there are a few other things that you should consider if you ever need to make a claim on your home insurance policy in the future. Now, if you are having building work done at your property and you have not notified your insurer that you are having these work done, it could invalidate your claim. So when I'm talking about building work, I'm not talking about if you are having your bathroom or kitchen done or any routine decorating or maintenance. It's more so if you're having things like extensions or loft conversions done. One of the key things with buildings insurance is that the insurer evaluates the cost to rebuild the property. Now, if you are enhancing your property by having building work done, it could cost more. Say your property was destroyed in a fire, to rebuild your property again to how it once was once the building work was completed. So you do need to notify your insurer, because they may need to reevaluate the rebuild cost, which is why it is important that you declare this to your insurer. But another reason is if you are having building work done, it could make your property more attractive to thieves, for example. Maybe you haven't got a window in at the property at a certain point, or the side access is open. So do make sure you are letting your insurer know if you are having building work done, but also read the T's and C's to make sure that things are covered. If you have accidental damage due to building work, is that covered under your home insurance policy? While we're still on the topic of home insurance, one thing to double check as well is a few months ago we had storm storms, and a lot of homes suffered damage due to the storms, and there were things such as fences and gates and hedges that were damaged. But actually, most home insurance policies don't cover damage to hedges, fences and gates due to storms. They will generally cover things such as damage to roof, for example, but you do need to read the T's and C's, because a lot of them will refuse to pay out if they deem the damage could be down to things such as wear and tear, and where you haven't been conducting routine maintenance on your property. So moving on from home insurance, pet insurance. As I briefly mentioned earlier, make sure you declare all pre-existing conditions that your pet may have. So you may not be able to get a policy for your pet to cover that particular pre-existing condition, but they may just exclude it altogether. But one thing you do have to consider is bilateral conditions. So this is when a condition can occur in another part of the body. So for example, your pet may have hip dysplasia. So your dog could have hip dysplasia in the left-hand side of its leg, and later down the line it could occur in the right leg. Most insurers will consider this as a bilateral condition, and depending on the type of policy you have, they may not pay out for it, as they deem it as the same condition that they covered previously.
So for claims on bilateral conditions, Lauren, does that depend on the insurer? For instance, is it one insurer might cover it whereas another doesn't? Or is it the actual type of policy that you're buying, in terms of like whether it's a comprehensive policy that will include it, or is it a kind of a mash of the two?
It's mostly the type of policy that you have. So if you have a lifetime policy, it is likely that this will be covered, because it will cover anything that your pet has up to a certain limit. But where this becomes a problem is if you reach the limit. So a lifetime policy, say you're insured for £8,000 per policy year, you could claim up to £8,000 in that year for the left leg. And then if your pet had a problem with the right leg, but you've already met the limit, you may have to self-fund that yourself in that year. But when the limit renews the following year, it would be covered. But if you have a different policy, for example, a time-limited policy, where the condition is only covered for 12 months and it later occurred down the line, the insurer would potentially deem this as a bilateral condition and say it is related, and therefore you will not be covered. So it largely depends on the policy you have. Lifetime pet insurance is obviously the most comprehensive and the best one, in my opinion, for your pet. However, it obviously does come at an expense and is expensive. One thing I would say with lifetime pet insurance is, if you do have a pet, do look at it when your pet is younger, because then you prevent any problems with conditions that occur later down the life, because your pet's already covered.
And so long as you're renewing that each year and continuing that cover on, whether it's with the same insurer or another, there's a history of having that policy in place from a young age. I get it. Okay. Anything else on pet insurance?
Yeah, so while we're there, one thing to consider is age limits. A lot of pet insurance policies have age limits, and there may be certain aspects of the policy that isn't covered if your pet reaches a certain age. So, for example, some of them may not cover your pet if it dies from an illness over the age of 9. And this age does vary depending on your insurer. So I would say to read your terms and conditions really carefully, just to make sure what your pet is and isn't covered for. Some policies also don't cover pets once they reach a certain age. So it depends on the provider that you choose to insure your pet from. Some of them don't have an age limit. They will insure any pet up to a certain age, but others will refuse to insure pets once they reach a certain age. And for some insurers, this could be lower and as low as 5, depending on the pet breed that you have. So do check your policy documents very carefully. A lot of them, if you're already insured, will continue to cover your pet. It's usually for a new policy where they may have an age limit, but do double check, because you could find that your pet may not be covered for things that you wish they were due to their age.
And is it right that some insurers also impose some sort of self-funding a percentage with some ages of pets?
Yeah, so that's called a percentage co-payment. So a lot of them may have a 20% co-payment once your pet reaches a certain age. So say, for example, your pet reaches the age of 9, you may have to pay your policy excess and a 20% co-payment once it reaches that age. So this is the amount you would have to pay if you make a claim. Okay, so moving on to car insurance, there's just some things that you should look out for. Now, you may know most of these, because I would say that some of them are fairly common knowledge, but we'll just cover them off for you anyway. So one of them is, we briefly touched on this earlier, always be honest. So if you are using your car to commute and you haven't declared this when you take out your policy, then you may not be covered if you have an accident and you are using your car to travel to work. Another thing is, some insurers have a set amount of time for when you should report an accident. So, for example, one of the insurers that I looked at earlier, they asked that you reported an incident within 48 hours of it happening. And if you come to renew your policy, you will need to declare if you have had any accidents or if anything has changed with your driving license. So, for example, if you have any driving convictions such as speeding fines, as this could potentially affect your policy price when it comes to renewing. And finally, another thing to consider is if you have left your car unlocked and it gets broken into, your insurer may not cover you if you go to make a claim for any damage to your vehicle or anything that was missing from the contents of your vehicle. Okay, so finally, to finish off with travel insurance. Now, again, that goes back to the pre-existing conditions. This is really, really important that you ensure you declare all pre-existing conditions. And this is even if you have visited a doctor or received treatment for something within 2 years prior to you traveling. Make sure that you do declare this. Or if you have something that is under investigation, you're waiting for an appointment from the doctors, you do need to declare this, because if you are unwell when you are away, your insurer may not pay out because it's something that you haven't told them you are suffering with.
I think that's really important because it's a pain, isn't it, going through, because you're trying to find out what medication you're on, or what, I can't remember what the exact time period. You can speak to your doctor. I know they're very busy. It's worth finding out the information. You might still have the medication or whatever in the cupboard. Go and seek those out, because actually it will tell you the date that they were prescribed to you on. All these things are worth doing because you don't want to be going on holiday, paying all that money for the insurance to only find out that you're not then covered. Do the extra work. It's worth it.
Yeah, exactly. And a lot of people say declaring the pre-existing conditions obviously increases your cover, but in my opinion, that is a small price to pay if you're abroad and then rack up hundreds of thousands of pounds in medical bills and then need to try and get home and pay them off. So definitely make sure that you declare all of your pre-existing conditions. Another thing is, if you are planning to travel abroad for any elective medical surgery, then this is something you need to consider, that maybe your average travel insurance policy isn't likely to cover you. So you may need to look down other avenues to try and get some specialist cover, or be aware that you're traveling abroad at your own risk. Another point with travel insurance is, do check if your travel insurance covers you against strike action. So a lot of the travel insurance policies I looked at do not cover you if the action, the industrial action or the strike action, was known at the time you booked your holiday or you took out your insurance policy, whichever comes first. So do check that very carefully in case you are affected by any industrial action from your airline or your holiday provider.
Yeah, that's a really important point. And actually, you've done an article on that, Lauren, which I'll add to the show notes on this podcast episode so that people can have a read if they're interested. Okay, so we've got one more thing, haven't we, on this?
Yeah, so finally, just to finish on this, I thought this one was quite interesting, actually. So you will need to check with each travel insurance provider, as it may vary between the different providers. But if you are traveling abroad and you are not vaccinated against any illness that you could pick up at the destination you are going to, and for some providers this does include COVID-19, you may not be covered. So, for example, here is something from the policy wording of a station policy. So, you are not covered for any expenses incurred as a result of any transmittable virus, illness, disease, including COVID-19 or any related mutated form of the virus, or tropical disease where you have not had the recommended inoculations and or taken the recommended medication. So that is something really important that you should bear in mind when travelling abroad.
That's really interesting. I had no idea that clause existed in travel insurance. So something to be aware of if that affects you. Okay, so let's bring Harvey onto the show then. And Harvey, you wrote an article recently. What insurance do you need when buying a house in the UK? Because we had some questions from listeners who are first-time buyers and they were a bit confused about which insurance policies they needed, what they had to buy, what was a choice kind of thing. So you put it all in an article, made it nice and simple and easy. We're going to quickly go through those and we're going to highlight one particular insurance product which we didn't know much about. So, Harvey, over to you.
Hi, Andy. Thanks for having me on. So, yeah, we looked at writing an article to help mostly new home buyers to the market so that they could understand insurance and at what stage, what types of insurance were needed, whether they were essential, whether they were perhaps nice to haves rather than essentials, and what kind of security they would give them.
Great. So you've written this article almost in a chronological order that people can understand at what point they need to buy it. So what's the first insurance policy that is likely to crop up when you're going through this process of buying your first house?
So for most people who are buying a home, and especially if they're new to the process, there's quite a lot of anxiety at the beginning of the process when you start parting with your money. So you may have to pay fees to a mortgage arranger, you may have to pay fees to a conveyancer, there may be fees involved with searches that need to be carried out if you've had your offer accepted and you're in those initial stages of buying your home. And at that point, it can feel a little bit stressful, especially if you're in a situation where you've perhaps been gazumped before, or a seller has pulled out of selling you a home at the point where you've perhaps incurred costs. So we did come across a type of home buyer's insurance, and home buyer's insurance essentially covers you against that loss. And it's not a large financial loss, but to many people who have squirreled away their pennies to meet a certain budget to buy the property that they're looking for, it can be quite hard to lose £500, £600, up to £1,000 if the house does fall through. And this type of insurance protects you against that.
And actually, Lauren, we could probably bring you in there, because this is something while we were chatting about in the office that you kind of wish you'd known, right?
Yeah, definitely. If I had known about this when I was purchasing my first property, I probably would have taken out that insurance policy, because I did a video for my house buying journey update the other day, and I worked out how much I had spent buying my first home. And I had a £400 upfront cost to the solicitors, and I had a £565 valuation and survey cost. So before I'd actually bought my property, I was £965 down. Now, if you have watched my videos, you would know there were numerous occasions throughout the process where our property sale could have fallen through. And if it had, I wouldn't have got that £965 back. So in my case, that insurance policy probably would have been something that would have helped me out in that situation.
Which is really useful to know, because firsthand Lauren has had this experience. And yes, it can be nervous buying your first home, and parting with that amount of money can feel stressful. But it's worth bearing in mind that some service providers like conveyancers and solicitors will carry your fees on. So if your property does fall through for any reason, if you find another property, they'll transfer those fees onto the buying process for another property. You do have to read your terms and conditions to understand this. And at that point, you can decide for yourself whether the policy adds value to you in your particular situation.
Okay, so that's the first consideration on the buying journey. What's next?
So yes, Andy, the next thing that you'll probably start looking at in terms of insurance during your house buying process is buildings insurance. Buildings insurance generally has to be in place at the point that you exchange contracts and start to complete on your property. And that's because your mortgage lender will want to know that the value of the property and the cost of rebuilding it, should the worst happen, is insured. And that protects them, it protects you, it protects everybody in the process. So buildings insurance is something that you'll have to look at quite early on, so that it's ready to go as and when the button is pushed and you're going to exchange your contract and take ownership of the property. But alongside that, you'll also find that your mortgage broker will start talking to you about things like life insurance and sickness insurance. These types of policies are there for situations where the worst may happen to you or your partner or other parties that are involved in financially committing to buying this house. In situations where illness strikes, it could damage your ability to carry on paying your mortgage payments. And for a lot of people, when they go to buy a property, the financial commitment is one of the largest financial undertakings they'll have during their lifetimes. So it stands to reason that you'd want to protect your income, and your mortgage broker, your financial advisor, or your life insurance broker can talk to you about the different ways in which you can cover your sickness. Some people will have very good sickness protection from their employer. Others will have savings that they can fall back on. These are all things that you need to consider when buying your insurance, because there may be other ways in which you would be able to get yourself through a difficult period if you did suffer illness. But insurance is the catch-all. So if you assess your own situation and you think, well, actually, if I became ill, my sick pay only lasts 10 days, 2 weeks, a month. Beyond that, I would then start to struggle to afford to pay my mortgage payment. Then at that point, you need an insurance policy that would replace that income and allow you to carry on living in your home without worrying about paying your mortgage payments.
And so there's no doubt that you'll have a conversation with someone at some point about life insurance, critical illness cover, income protection. These are insurances which are very, very sensible. They're definitely worth having, but obviously they do come at a cost, and it depends on your situation. So don't feel pressured or railroaded into buying those policies. And also consider that the policies that you're being offered in that regard might be one specific policy from one insurer. It might not be the best policy on the market. So you have the option to speak to someone independent and get advice and work out the best policy for you at the best price. So don't feel railroaded into it. You don't have to buy it, but if you do consider it, shop around.
Absolutely, Andy. You know, there is no one size fits all when it comes to personal insurances. It's very much dictated by your own personal circumstances. So like Andy said, do take some advice and only buy what you need. Once you're in your home, you've protected your income and you're starting to enjoy your home, you may start feeling nervous. Now, for a lot of first-time buyers, they may have used up all of their savings for the deposit and the costs incurred when buying their home. And at that point, you may start to think about big things going wrong. Home ownership is desirable to many people, but it comes with its own responsibilities. So if you're a renter before, you perhaps wouldn't have had to think about things like the heating breaking down, the boiler going, or even flooding happening because there's a water leak in the house. But suddenly you are going to be responsible for those things. So it can be reassuring to have emergency home cover insurance in place, and that can protect you against large costs incurred by unexpected things like the boiler packing up or appliances breaking down, water damage, and things that may be beyond your control, but could spare you a large expense at a time when you have little in the bank.
Great. And some of those insurance products include things like servicing. Like I know, for example, the gas and heating systems, you can get annual services as part of that, which can actually prevent further problems down the line as part of the overall cost of the insurance that you're buying. So have a look at those. There's lots and lots of different policies online, really sensible to consider once you're in. What about contents insurance? We talked about buildings insurance. Do people need to insure that? Do they have to insure their contents?
Not at all. Contents insurance is really up to yourselves, and it really depends on the valuables that you have within your property. It's sensible to have insurance where there would be a loss or a potential loss if something was damaged, stolen. But most people, if they've rented a property, will have had some experience of contents insurance, because generally, even if you're in a rented property, you will look to insure your property that sits within that home, although you haven't had responsibility for the buildings insurance. But contents insurance can go a long way towards protecting things like devices, furniture, and fittings that may not be covered under your buildings insurance.
And so there's a quick rundown on the insurance policies connected to buying your first house. And as I say, the reason we brought this to the podcast, a lot of it, no doubt you will know, but the home buyers insurance was new to us, and we just thought it was worth highlighting that. And actually on that, the average cost of those policies is around about £60 all in. So it's just a one-off cost. You pay the premium and you're covered, and the payout is on average between £600 and £700 for your payout on that. And so that may be a policy that may be interesting to you if you've perhaps been gazumped in the past, or if your property's been downvalued and ultimately falls through. Okay, so on to the last piece then, and I'm going to be finishing off with something that ties in a little bit with what Harvey was just speaking about in terms of buying your first home. And it's really just an update on what's happening with the Help to Buy scheme. And also there's a new scheme that's launched which kind of replaces it. So let's go back then. What is the Help to Buy scheme? Well, it's where first-time buyers can get a loan from the UK government to put towards the cost of buying a property. It's aimed primarily at those struggling to save up a deposit, and it can offer a loan worth up to 20% of the property value, or 40% in London. The key thing about the Help to Buy scheme is it is an interest-free loan for the first 5 years, and it can allow first-time buyers to buy a property with as little as 5% deposit. And it's been a really popular scheme over the last few years. In fact, figures show that by the end of 2021, 355,000 properties worth a combined £99 billion have been bought with the aid of the Help to Buy equity loan. And the total value of the loans advanced was actually £22 billion. So hugely popular scheme. But the reason I bring it up in the pod is the fact that this scheme is going to come to an end in March 2023. And recent information has now come to light to say that if you want to take advantage of that scheme, to make sure that you hit that March deadline, you actually have to have a property reserved by the end of October 2022. So actually time is running out for that. So if you're someone who's saving up for your first home and you're hoping to take advantage of this scheme, make sure that that deadline, the end of October, is achievable for you to reserve your property. And no doubt some of you are thinking, well, that's a shame it's coming to an end. Well, there is a bit of light at the end of the tunnel, because although the Help to Buy scheme is coming to an end, the government has come up with a new scheme that people can take advantage of, and it's called the Help to Build scheme. Now, the Help to Build scheme was launched in June 2022, and it's available to people in England who want to custom build or self-build their own home. So I thought it was a nice piece to put onto the podcast to let people know that the Help to Buy scheme is coming to an end. Make sure that you know the closing date for applications, but also to highlight this new scheme because I don't think it's got enough press, and I think it's quite interesting. So the Help to Build scheme, as we mentioned there, can help you custom build or self-build your home. But what does that mean? What can you actually do with the Help to Build scheme? Well, you can design your property. You can put features in that suit your lifestyle, such as energy efficiency and smart technology. So you can design all of that from scratch. You can obviously plan the internal layout yourself. That's part of what a custom build is. So you can design a home that suits your family's specific needs. And obviously, because it's self-build and you'll need to get the plot of land as well, you can choose the location, which means that your home can be of the size and scale and in the right location that you desire. And when looking online, the government sets out who these Help to Build equity loans are designed for. And it says the scheme can help people with specific living requirements. It can create homes that are tailored to specific needs, including those with disabilities or those who perhaps live with large family or elderly relatives. And the idea of the Help to Build scheme is that it can help to boost the UK's underdeveloped self and custom build sector, which in turn leads to creating new jobs and increases the number of new homes and helps to grow the economy. So that's what's on the government website. That's the purpose set out by the government. So how does it work then? Well, Help to Build can offer an equity loan based on the estimated costs to buy the plot of land and build the home. So it's the combined cost of both. The loan amount can be between 5 to 20% of the total estimated costs of buying the land and building the house. And that is doubled if you live in the London area, so up to 40% of the total costs in London. And exactly like the Help to Buy equity loan scheme, that loan is interest-free for the first 5 years. Now, if eligible, you can spend up to £600,000 on the home, and that must include the cost of the land if you don't already own it, and no more than £400,000 of the cost to build the property. So £400,000 on the building costs and up to £600,000 total cost, land and building costs. In terms of the eligibility criteria, you can apply for Help to Build if you are over the age of 18 and you have the right to live in England. You must also confirm that you will live in the newly built home as your only home. So you can't do this as a second property or perhaps as a development as part of your portfolio if you wish to sell it on. And another part of the eligibility procedure is you must secure a self-build mortgage from a lender that's registered with the Help to Build scheme. And when you apply, Homes England will carry out all of the eligibility checks, including making sure that you can afford to pay the equity loan payment, similar to what a mortgage lender would do when they do their eligibility checks. In terms of how long this scheme is going to run, well, it launched in June 2022 and it says that funding is going to be available for 4 years. And then if demand is higher than expected, funding may become unavailable sooner. So it all depends on how many people take up the Help to Build scheme. In terms of the process, how long will it take? Well, if you accept the offer of the equity loan once you've applied from Help to Build, you'll have 3 years to buy the land if needed, and also to build your home. So let's have a quick look then on how you apply for the Help to Build scheme. You need to firstly secure a self-build mortgage from a lender that's registered with Help to Build or through a broker. Next, you need to apply for the Help to Build loan through Homes England. You can do that online. We'll put links to that in the podcast show notes. And then if your application is successful, you'll receive an equity loan offer based on the estimated cost to buy a plot of land if needed and build your home. And when your home is complete, Homes England will pay the equity loan to the registered lender. So there we have Help to Build in a nutshell, what it is, who can qualify, and roughly how it works. And what's quite interesting is that scheme is not just available to first-time buyers. That scheme is open to anyone who wishes to secure a plot of land and build their own home. And I think that's hugely exciting for a lot of people. And I think it's something people could definitely consider, as well as the more traditional routes of moving house or location. Have a look at Help to Build and see if there's something in there which could work for you. Okay, so that's it. We're nearly done this week. Damien, let's bring you back into the pod.
Well, I felt a bit of a sort of a spare part there, listen to that, but it was again a fantastic episode, and I always love to hear the team to take over the episode. I think the only thing that's left to say really is that you're not going to hear from any of us for a week, because we're all taking a week off in the lead up to spend time with our families over the bank holiday weekend. So there won't be a Money to the Masses podcast episode next week. We'll be back in earnest again at the start of September in 2 weeks' time.
So that's it. We're done for this week. If you want to get in touch with Damien or I, you can do so. Damien at moneytothemasses.com, Andy at moneytothemasses.com. Bearing in mind, we are having a little holiday, so maybe you might have to wait for a response on those. But do get in touch if you've got any feedback or if you want to let us know of anything you'd like us to cover in future episodes. So that's it. We're done for this week.
Yeah,
until next time.
Until next time.